What's up, guys? Mike Sharp here. This is Sharp Investing, and I think we have a mania in progress. This is very 1999, which is interesting because we just saw one of those in 2021. They seem to be getting more frequent. Now, this bubble can keep going. I think this bubble is getting inflated right now. We see crazy stuff like 2 times Algo ETFs being available. This is a company that will not have revenue until 2040. We have space stocks making new highs on no revenue. We have all the AI plays going berserk, and just some weird stuff happening in the markets. Uranium, like it's really crazy right now, and it could get crazier. So, what am I doing about this, right? So, actually, before we talk about that, I think that we should. I'm not predicting a crash here, right? Let's be clear about that. I'm saying it could crash because there's all this crazy stuff going on. But we also have Trump, who has definitely shown his colors this year, showing that he is not able to tolerate a stock market being down. He came out of the gate saying it's mainstream's turn. We're going to make sure the average person gets what they need. And then he started implementing his policies. The market crashed in April, and he totally changed direction and basically said he can't tolerate the market going down. Ended up, cutting taxes, doing his usual stuff. The deficit's going to be huge. And now we have him talking about potentially handing out checks to redistribute tariff revenue. And I think that's possible going into midterms. He might want to buy some votes. He doesn't seem to care about debt levels. Who knows? This thing could go crazy, right? It's not totally berserk yet. Like I started in the .com bubble. I got blown up in that bubble because I didn't know what I was doing, but it was way crazier at the end of that than it is right now. So there's still another gear that this thing could find. But I'm here to talk about my portfolio and what I'm doing to protect myself and achieve my goals here. So I'll give you the goals that I'm looking at here. So one, if the market gets crushed, if that crash does come, I want to have at least 20% of my portfolio in cash so I can scoop up some deals. The second goal is I want to actually ride this up if it keeps going, right? So just holding cash might not actually make sense with those two goals. I have a way to make it work though. The third one is if there is a market crash, I do not want to tolerate more than a 25% drawdown in my portfolio value. Now, I know that Charlie teaches us, if you can't handle 50% drawdown, you shouldn't be in stocks, but I can handle it. I've dealt with it before, but I've also learned that I don't want to handle it if I don't have to, right? And I don't think it's required as part of investing now that I know more about this stuff. So, and my style isn't just buy and hold forever either, right? So I do a lot more, I'm a lot more active than somebody like Buffett or Munger are. And I think most people are. Let's start by saying, don't trick yourself into thinking you are them. Look at your history of buys and sells and say, am I actually these guys? I'm not. So like I said, I don't want to tolerate more than a 20% drawdown. So here's how my portfolio is structured right now. There's 4 buckets. The investment bucket is about 50%. And these are what I would consider market cyclical, sort of systemic risk stocks, right? So these are the ones we talk about on the channel: StoneCo, Vistry, Newbank, App11, Full House, and Caspi. That's about 50%. And then Flow, I've moved it outside of that group, and that's about 10% of my total portfolio, because Flow is not a highly correlated to the stock market, whereas all those other ones are. I talked about in my other videos, like I usually keep about 20% of my portfolio in cash, or I can do what I want with it. So right now it's mostly in discretionary trades. There's a lot of silver and gold in there, plus some other high octane trades. And I've got another one on there that says DLO. So that's D-Local. I haven't done a video on it yet, but that is a stock that I bought. But it does have a stop in it, right? So I won't ride this all the way down. That's why I'm including it in this section, because all these trades I have in this section, they all have stops on them. So if they go down a certain amount, they'll just be converted to cash, right? And that's part of the way I'm protecting my cash component, but also trying to get the upside. I've got these trades that will do well if the market keeps going up. And if it goes down, I'll take like a 10% hit on it and it'll be converted to cash. So then sharp trading, this is a new algo system that I've built since, well, maybe 10 months ago I started building it. And this is a non-correlated system that isn't correlated to the stock market. And I might show you some results here if I can find them and show you why that's different. But anyway, that's a trading system that has a lot of mean reversion trades. It has shorts in it, and it has a system that trades the VIXI, which is basically the VIX. So as the stock market falls, the VIX goes up, and if you're long this VIXI, you can make money when the market's crashing. So it has a component there that has protected it in past crashes when I've back tested this. So it actually did quite well in the COVID crash. So let's look at the scenarios that I've built here. I've got 4 scenarios here: a crash, slow bear market, basically flat market, which would be just chopping up and down sideways, grinding bull market upwards. I think that's what we're in right now. It's not spiking to the upside. It's just relentlessly going higher with small pullbacks, right? So I would say that's a grinding bull market. Let's say it continues. And then a mania bubble would be where you get this sort of vertical move and everything. And, you know, you see the real hallmarks of a bubble and a mania in the public, right? You get everybody's in stocks. Your grandmother's asking you about stocks. But this is how they would all perform. I've just put basically some numbers around how I think they would perform. Like my investments will all get destroyed in a crash, the investment bucket, because there's a lot of emerging markets there. I don't think any of this is going to hold up particularly well if the market melts down. And just as a word of warning, if you have good companies and you think, well, the valuation is so low, this will do fine in a bear market, I'm here to tell you, you're probably wrong. If you get in a real bear market or a crash like 2008, there's nothing that's safe. Nothing is safe, and it's just going to get cheaper and cheaper and cheaper, and everything gets destroyed. So, you know, even buying safe stuff like Bank of America or whatever, well, that's not good because that's a cyclical. But like pick a safe stock, even if it's like Costco, something like Costco is going to get nuked as well. But my stuff's going to get extra nuked because I'm in emerging markets. In a slow bear market, that stuff's going to get killed too. And then in flat to up, that stuff will all do well, I think. Flow traders is the opposite. It's actually, I think if the market keeps going up relentlessly, flow traders will go down. So I'm putting a 20% minus 20 on those things. That would put it down about $20. And again, this is general. Let's not use price targets here. This is just a general idea of the direction that I think things are going to go. The size of these moves could be quite different from what I've got on here. Discretionary trades, yeah, I'll lose my 10% on those of those positions as they get stopped out. And then if the market keeps going higher, I think this stuff has high beta to the upside. So those will make the most money. The Algo system actually does well in all environments. And I will show that to you now. This is a system that I have built. It took me about 8 months to build this, but it's a trading system that is automatic, and I just upload trades every day to my brokerage via what my software tells me. And if I back tested this pretty extensively, and it's produced over 60% CAGR since 2007. That was before the crash. I wanted to test it in the 2008 crash for sure. And so it's done very well, as you can see, versus the SPY. SPY is just over 10%. The drawdown on the system is only 21%. That's the maximum it's gone from top to bottom. And then if we look at the monthly gains, and I'll show you why I think this is not going to be correlated to the markets. But if we look at it currently, let's look at some of the years. 2008, it actually did really well. It was up 125% in that year. And in early 2009, while the market was still down, again, you can see it was up. I think it bottomed in March of 2009. So it survived. It passed that test. Late 2018, you can see there's a down month there, October 2018. That was a Federal Reserve created crash, and the system didn't like that one, and it was down 12% in a month. So this is a pretty volatile system, but in the end, you can see every year is positive, including if I look at 2020, the COVID crash, March 2020, the thing was actually up 27% in that month. So that's what I was saying. It was trading the VIXI, and it was long the VIXI, which spiked a lot when that crash came. So I think that this system is going to offer me some good crash protection. Actually did 18% in the month in the Trump crash as well in April. It did badly the 2 months before that, right? So it's not that the timing is not correlated with the stock market, which is the key thing. So if we go back to my analysis here and my projection of what the portfolio would be after these scenarios play out, we have a crash scenario. You can see the investments got destroyed. It went from 50% to 20%. So it lost a huge amount of its value in a crash. It's down to 30% in a slow bear market. Flows up somewhat in those scenarios. And discretionary trades, those are at 19% because the 10% stop kicked in and I lost 2% of my original 21. And basically that just got turned to cash if the market starts going down. And then the algo trading system, I think, is going to be up slightly in a crash scenario. So what does that mean? It means that if I'm right, which I'm not going to be in all those scenarios, I would be down 23%. My portfolio would be down 23% in a crash scenario or 20% in a slow bear market. That achieves my goal of not taking more than a 25% drawdown. And then you can see, I'm not going to go over the flat grinding bull or mania things because those are obviously, like, it's easy to make money in those scenarios. Just buy good stocks or even buy bad stocks and you probably make money. But if we look at the cash component, like I said, I wanted 20% in cash so I could buy stuff on the cheap. Basically that 19%, that is just the discretionary trades that got liquidated. So it's just sitting there in cash. And that's a percentage of the starting value of the portfolio. Now, if we use the current value, which would be down 23%, the actual cash component is 25% in that scenario because the portfolio got smaller. Now, if we look at the other scenario that could happen is Flow Traders does really well in a crash or a bear market, and the stock spikes up because they're earning a lot of money. Now, in that scenario, one of the beauty things about Flow, because it's counter-cyclical, if you get that scenario, you can sell Flow and put it in stuff that is, you could put it in great businesses that have been decimated by this bear market or by this crash, which again, will probably happen. So I just need to have my buy list ready and I can check them over and maybe buy that stuff on the cheap, trade in the Flow. So that if I did sell Flow, then I'd have, over a third of the portfolio available for in cash that I could use for purchases. So again, this is the way I'm structured. I think I can make money on the upside if the market keeps going because I've got all those trades. I've got the EM stocks that I like, those great companies that will do well. Again, really high beta. The second goal would be if the market gets crushed, I want 20% in cash. Looks like I've achieved that too, just by having those stops in. And then I'm only willing to tolerate 25% drawdown. In this scenario, it produced that. Now, there's a lot of assumptions here, so it's not going to turn out exactly like this, but I think I have enough stuff in there that I believe will do well in a negative environment, and particularly those stops that help me get out of this stuff. So this is how I'm positioned, sort of all weather. Now, if a nuclear bomb hits, it all probably goes down, but then I got other things to worry about. So, if I was to bet, I think the market's going to keep going up because that's what Trump wants, and I don't want to bet against him. But I'm ready for anything. Thanks very much, guys. Catch you in the next video.